Most investors spend hours reading financial statements before buying stocks. I use 3 prompts and it takes only 60 seconds. Here's how it works. Awesome, you're still here. So let me show you exactly how this process works. Firstly, I'm on Motley Fool. I'm here to just find a stock, just so we can do a little research and I can show you just a hands-on example of how I do this. So we see over here Pinterest. I mean, it's obvious. Let's just take a look at it. I don't know if it's a good company or not, but this is how I would tell. So let us go. Here are the AI prompts. All we're doing is going to ChatGPT. So prompt number 1 is giving us all the financial information that we need. That's exactly what this thing's doing. So basically, we're telling the AI that you're a top finance expert and investor. Find the following information for me that is accurate as possible today. Use Yahoo Finance along with other sources that can give us the most accurate data. So we do it for the company. And then I'll let you pause the video and read through here. But basically, we're just asking for the current price, the week high-low market capitalization, earnings per share, payout ratios, all these different things that give us a really accurate kind of overview of how the company is doing and its health. And you can see kind of cash flow, the 5-year growth, what's the earnings per share for the past 5 years and the projected earnings per share. And this is giving just an accurate overview of this kind of company. All we're looking for right now is data, okay? Accurate data, let me rather say. So let me just copy and paste this, and we are putting this in here, and we are doing it for Pinterest. So let's see what it pops up with. Okay, so while it's working, the next prompt we're going to be doing is we're going to get AI to analyze this data. So now that we have the data, which is cool, we're going to get it to give us the potential risks, the upsides, all of these things. So we're saying, we're giving it a role. We're saying you're a world-class financial expert and stock investing master. Give me a detailed analysis of whether this is a good company to invest in based on the current financial information. Use simple language so that it's easy to understand. So now I'm just going to copy and paste this one back in here. Is it done? Yes. Okay. So we're going to paste it and we're going to go over here. Okay. I just want to take a look here at what it's saying. Here's all the information. It's just a little bit broken up by, revenue, earnings, and growth. So let's see what it comes up with. So it gives us the current stock chart, and it's putting these into these umbrellas. So if you're doing this analysis, you basically really want to know, is it profitable? Is it growing? And is it affordable? In a nutshell, that's kind of what we're looking at. So it's just going through here. Company, its profit. Okay, well, it's saying what we want, right? Pinterest struggled with profitability in earlier years. Okay, it was investing heavily in growth. It now consistently produces profits and free cash flow. So a simple verdict on profitability is it's good. It's basically a profitable platform instead of a growth startup. So that's good to know. Then growth. Is the company getting bigger every year? Revenue is the most important factor for tech platforms, okay? So revenue growth. Pinterest has grown revenue roughly mid-teens annually over the last several years. So that's pretty healthy, right? Mid-teens. So better monetization. Here's what they did to get that growth. And then Pinterest monetizes users far less than competitors, okay? So if Pinterest closes even part of that gap, revenue can grow significantly. So that's basically saying that it's got a big opportunity for that. So now the growth risks. Advertising budgets shrink, so it's advertising cycles, okay, and competition. It's got big competitors, including Meta, Google, and TikTok. So perfect, right? Moderately strong growth potential. And now we look at valuation. So is the stock cheap or expensive? Like, obviously we want it to be cheap, right? So we're saying it's relatively cheap, okay? So the typical PE ranges, great. Big tech, 25 to 35. This is at 11. So it's pricing it like a slow growth company, not a growth platform. So this is good, right? This is a really attractive kind of prospect already. And now it brings up the idea that its stock fell recently. And this could be, I mean, it's saying the ad market slowdown. We knew this because there's fears of recessions. Investors shift away from growth stocks. Okay, well, maybe that's into AI. Competition concerns, fair enough, that's always going to be there, right? As long as Meta and all of them exist, you're going to have this. But I don't think this is a defining point in this company. So if you put it together, right, the growth is good but not explosive, profitability is good, and the valuation is attractive. So if we look at the simple investor verdict, right, it's a reasonable long-term investment candidate. So it's not a hyper-growth stock anymore, but it's a stable tech platform. So it's like buying a mid-growth tech company at a value stock price. So this seems very attractive, right? So now what I want to do is our final prompt is over here. So I want to further mitigate the risk. So basically, I wanted to go and look at current news events that could have a large negative impact on the stock. So now I'm probably expecting Iran, and I'm expecting things like tech bubbles, tech sell-offs. So let's see what it comes up with. It's searching the web. So yeah, several recent developments. And this is very, very important because we want to know the kind of climate, like what is America doing, what is Trump doing, how can he impact this, because this is going to be the most likely scenario that throws this stock downwards. Okay, so tariffs, this is a concern, right? It's advertising. Okay, most of its revenue from advertising, so we're seeing tariffs is a huge issue, right? And it's impacting so much of the stock market, so this is a big kind of current risk. Slowing advertising growth, it's a macro risk. Okay, well, we knew that because advertising spending cycles, we've got competition, we've got basically a slowdown in the economy, a lot of fears of recession, and then rising competition from AI platforms. So AI-driven ads. So basically, they're worried that these companies are going to get so AI friendly, basically, and effective that Pinterest could struggle to compete. Layoffs and internal restructuring, heavy dependence on retailers, and here's some positive news as well. Okay, so cool. So this is just to get an understanding. So the purpose of this video isn't to tell you yes or no. The purpose of this video is to give you an overall understanding of this stock. So the final step that I would be doing now is I would be going to Yahoo Finance and I would look at Pinterest. Obviously, I'd read through this. I kind of skimmed it a bit here. And then I would look at Pinterest and I'd look at my 5-year. So you can see it's at a low point, right? Its highest point, let's look at all time. So it's down 17%. It had huge growth here. So there's this, right? It's at 19. Okay, cool. So now I would be looking at the news as well. So you want positive news, right? Is it a buy? Okay. So a billionaire activist pours 1 billion to the stock. Great. Okay. So a neutral rating. I'm looking for really positive news because there's so many companies that you can have such positive news. Okay, so if we look here, people investing in it, that's fine. A billion reason to buy Pinterest. I'd probably look at some of these and just take an idea, and then I'd see over here. So earnings trend based over here on Pinterest, right? So they've missed. So May is quite a big deal, but you can see over here they've been missing their earnings announcements. Okay, so that's something that makes me nervous. And then basically I'd look here. So you can see over here, out of 40 people, there's 20 that say hold, there's 18 that say buy, and that looks like 1 and 1. Okay, so that gives us 40. So one person says sell, 20 underperform, 18 buy, 40 hold. So I'll just look here, right? And I'd take, okay, so these are other people watching, these are comparisons, okay. So based on this is just my opinion, but I would probably avoid Pinterest. And the reason why I say this is fine. All of it is information. It's just information that allows you to make better decisions. But for me, I'm generally looking for overwhelmingly positive information. So if you look at something like NVIDIA, it's going to be overwhelmingly positive, like a vast majority of the time. So you can see, like, if you look here, you should be buying, okay, well, I mean, we're not going through enough of this news, but you're going to see if you just follow NVIDIA always, it's overwhelmingly positive. And this is overwhelmingly positive. And you can see its current is 182, average is 266 for price targets. It's just generally exponentially more positive than Pinterest. This is the point that I'm trying to get across from you. So this is my research process. I would read through all of this. You can ask extended kind of questions in this because it has the right context now. So it has the right information, and it's, instead of hallucinating advice, it's giving you real kind of information and advice based on data. So you can continue having the conversation. It's really helpful. Don't take this as a sign to go buy Pinterest or NVIDIA. You got to make your own decisions, but this is how I do it. If you want my one-page investing plan that shows you exactly how I turn my stocks into thousands of dollars every single month, comment stocks below and I'll send it to you. Please like and subscribe this video if you found it helpful. And as always, thanks for being here. I'll check you soon.